Namaste, my dear friends. Referring to you now, applicability of input tax credit in special circumstances. Section 18 of the CGST deals with this, where we have Section 18, subsection 1, Clause A, Clause B, Clause C and Clause D to avail the input tax credit in various circumstances. If you refer here, Section 18, subsection 1, Clause A refers person got registered within 30 days from the date need arises. What do you mean this? So far, I am the unregistered person supplying the goods or services. Though it may be taxable, I have not paid the GST because I have not got registered. Why not got registered? Because my aggregate turnover not exceeded the threshold limit prescribed for registration. That means, in case of a trader, 40 lakhs, service provider, 20 lakhs. In the case where that person located in the MMNT, Manipur, Mizoram, Nagaland, Tripura, not exceeded 10 lakhs. Therefore, I have not got registered. If not got registered, not required to pay GST, though I may supply the taxable supply of goods or services. Now, my turnover crossed the limit of the threshold limit for registration. I have to go for registration. Under section 22, subsection 1 of the CGST, there is a time limit to go for registration. Within 30 days from the date of need arises, apply for the want of registration by making the application form GST REG 01. Application for registration. Time limit to go for that 30 days from the date of need arises. All are good. Then what we are talking about here? Section 18, subsection 1, clause A. Sir, as a unregistered person dealing with taxable supplies, I have procured the goods, I have received the services. Prior to obtaining certificate of registration, prior to I am liable to pay GST, prior to I became taxable person, I have procured goods or services. I too procured capital goods. By payment of the GST, I have tax invoice in my hand. Can avail the input tax credit if I purchase the goods during the tenure prior to the date of making application for registration. That means during the tenure of unregistered person, if I procure the goods or services, am I eligible to avail input tax credit? Section 18, subsection 1, clause A says that why not? Hey, Mr. Person, now you became a taxable person because you are liable for registration. Prior to the date, if you purchase the goods, you are eligible to avail input tax credit. Only on input goods. As you are aware of that, we have input goods, input services and capital goods. Among the three, only one, inputs. As defined under section 2, subsection 59 of the CGST, inputs only qualify for input tax credit, provided such GST on such input tax credit on such inputs should not be older than 1 year from the date of purchase till the date of availing input tax credit. See, section 18, subsection 2 specifically highlights by saying that if the invoice what we are talking about input goods on which to claim input tax credit is more than 1 year from the date of invoice till the date of availing the input tax credit, then you are not eligible to claim input tax credit even on input goods. Then what is input goods? As we understood section 2, subsection 59 of the CGST, input goods means other than capital goods. Other than capital goods. Then what do you mean by capital goods? As you are aware of that section 2, subsection 19 of the CGST, the value of which is capitalized in the books of accounts by the person who is availing the input tax credit and use that in the course or furtherance of his output supplies. So, to simplify this, so far I am an unregistered person. Now I am liable for registration. Then Need arises from today, I have to go for registration up to the previous day, up to the yesterday, whatever inputs I purchase, alone eligible to claim ITC, GST paid on capital goods, GST paid on input services, not qualify for input tax credit. Sir, input goods qualify for ITC. How to understand the input goods? Simple to say, what you are going to debit your P&L account is input goods. Input goods are those goods which is going to be debit to your P&L account is input goods in simple terminology otherwise. That input goods on which I paid the GST, input tax credit allowed for me, provided the invoice which I am taking as a base for availing input tax credit should not be older than 1 year from the date of invoice till the date of availing ITC. It should not be more than 1 year. It should be within 1 year. Then input tax credit allowed on inputs. At the same time, if the input tax credit on such inputs exceeds rupees 2 lakh rupees, in that case, a certificate from a practicing cost accountant or from a practicing chartered accountant is warranted if the value of input tax credit what I am going to avail is more than 2 lakh rupees. A certificate from a practicing cost accountant or from a practicing chartered accountant is required. Got the clarity, my dear friends, in the given case of section 18, subsection 1, class A, what I referred here. Illustration makes crystal clear this. I am going to bring to notice right now the example on this. Messrs. X Limited became liable to pay tax on 1st December and has obtained registration on 15 December. The GST paid goods lying in the premises of X Limited as on 30th November are as follows. Raw material value GST, capital goods value GST, raw material lying in the work in progress, the value and GST. Further, the raw material lying in the finished goods, there on GST. You are required to answer the following. Eligible amount of input tax credit, time limit to submit the declaration on common portal, whether any certification required while availing the credit, if so, from whom. Very clear. As you are aware of that, this is a clear-cut provision falls under section 18(1) class A. They got registered from 15th December. They liable to pay GST on 1st December onwards, obtain the registration within 30 days. Now, they are the taxable person from 1st December, registered person from 15th December. What is the effective date of registration? Quickly respond to me. Effective date of registration is from 1st December onwards. This date is the effective date of registration because he liable to pay tax. If you say from 15th December, effective date from 1st of December to 14th December, whatever he supplies is free from GST. Got the clarity, my dear? So, it is from the date liable for registration. From which date liable for registration? 1st of December. From that date onwards, his name called as a taxable person. If so, the effective date of registration for him from 1st of December. That means the goods lying before the 1st of December immediately preceding the date of 1st of December. Means as on 30th November, the stock in the name of inputs lying in the work in progress, inputs lying in the finished goods only qualify for input tax credit. What about capital goods? My dear friends, capital goods credit not allowed. Raw material ITC allowed. Raw material in work in progress ITC allowed. Raw material lying in the finished goods ITC allowed. Therefore, here ITC allowed. Here no ITC. Here ITC allowed. Here ITC allowed. How much comes total? ITC allowed 36,000 plus 54 plus 2 lakh 16. How much? Quickly, fast. You have to tell me no, my friends, or interact no. Simply sitting and listening, now you sleep, no, my dear.
3,06,000.
3,06,000. This is the amount of ITC allowed to X Limited. Since is more than 2 lakh rupees. Therefore, certificate from a practicing chartered accountant, certificate from a practicing cost accountant, as the case may be, is required. So, eligible amount of input is, we got it, 3,06,000. Time limit to submit declaration on common portal. It is ITC 01 ITC 01 within 30 days from the date of eligible to avail the input tax credit. That means here they given, yeah, he got registered, no, 15th December he got registered. From the date of obtain the certificate of registration, within a period of 30 days should submit ITC 01, a intimation to department. I am going to avail the input tax credit of inputs lying in the work in progress, inputs lying in the finished goods, and since the amount more than 2 lakh rupees, a certificate has been obtained from a practicing chartered accountant. So I given here 3,06,000 is the eligible amount of input tax credit. Declaration form GST ITC 01 within 30 days. That means from 15th of December you got registration, means the 30th day ends on 14th of January. Submit within 14th of January form GST ITC 01 to avail the input tax credit, and a declaration is required to certify that yes, the credit is availed is right credit. Certificate from practicing CA or practicing cost accountant is warranted. Actually, where we are? We are here. This particular provision I referred. Any doubt in the given case? Shall I proceed further?
Yes, sir.
Yeah. So it is there in your, I think in your material, it is there, study material also is there. I have mentioned this. This problem is a study material problem, I can say now. Come back. What about section 18, subsection 1, class B? Here there is one section, 18(1)(b). How to understand this? Person voluntarily got registered. Person voluntarily obtained registration. Person voluntarily obtained registration. Okay. Why voluntarily obtained registration? Because he wanted to avail the input tax credit, or he wanted to have the trustworthiness for business from the point of the customers. Because if I register a person, my customers will believe me, and I may be in a position to pass the credit to my recipients. There are so many advantages we have. Therefore, the turnover limit not exceeded. In spite of that, I obtain the registration. Voluntarily, if I obtain the registration, prior to the date of obtaining the certificate of registration voluntarily, whatever input tax credit, that means whatever may be the input goods on which GST paid by me, I can avail ITC, provided those inputs on which I am claiming input tax credit, the tax invoice should not be older than 1 year from the date of invoice till the date of availing input tax credit, is one point. Next point, I cannot avail the input tax credit on capital goods as well as input services, similar to 18(1)(a). At the same time, I can avail the input tax credit if the tax credit on inputs more than 2 lakhs after obtaining a certificate from practicing cost accountant or a chartered accountant. At the same time, I should inform to department by filing the form GST ITC 01, a declaration within 30 days from the date of obtaining certificate of registration. Yes, I am going to claim ITC. Please allow me to claim an intimation to department, a declaration, form GST ITC 01. In this combination only the practice takes place. Question of the examiner also in this regard practically will ask, sir, on input goods only input tax credit allowed, even section 18(1)(b)? Yes. Capital goods credit not allowed. Inputs is not allowed. Sir, in that case, as and what date of input goods credit is allowed, sir? In the case of voluntary registration, if I obtain the certificate of registration today, immediately preceding the date of obtaining certificate of registration, input tax credit allowed. How to understand this? Numeric example I am going to bring to notice as follows. Question 196. Mr. A applies for voluntary registration on 22nd November and obtained certificate of registration on 25th November. Mr. A has stock on the following two dates. 1. Mr. A has stock on 21st November. Opening balance number of units 12,000. Purchased on 21st November 20,000. Sold on 21st November 8,000 units. On 24th November, Mr. A purchased 5,000 units and sold 15,000 units. On 24th November, Mr. A is also purchased plant and machinery for 2 lakhs plus GST 28%. Mr. A purchased the goods at a uniform rate throughout the year at 100 rupees per unit plus GST 18%. You are required to find the eligible input tax credit to Mr. A. Very good, excellent problem. Your study material problem one can expect in the coming exams. As I told you, the law of the land says what? Here, inputs held in stock, inputs held in work in progress, inputs held in the finished goods as on the date immediately preceding the date of grant of registration. What is the stock? If I refer the stock, here 25th of December they got obtained registration. Immediately preceding the date means the date must be 24th November. If so, on 24th November, my inputs not known. My inputs not known. Therefore, I have to refer opening balance. How much here? Opening balance. Number of units on 21st is 12,000 units plus purchases on 21st November 20,000 units less sale 8,000 units. If I reduce, how much will be there? 24,000 units, correct? Hey misters, correct? No calendar.
Yes, sir.
24,000 is what date? Here means 24th November, A purchased 5,000 units and sold 15,000 units. That means further on 24th November, number of closing balance 24,000 units. They said purchase on 24th, how much? 5,000. Sold how much? 15,000. Deduct. So closing balance number of units, how many units? As on 24th November, how many units closing balance?
14,000.
40? 40
14,000, sir.
1 4.
One
Yes.
four, it is zero.
Very good, Amma. Like that you can say 1 4, you say 000. Yes, because the communication should not be a problem to us. So 14,000 units closing balance, that is the balance available in the organization of Mr. A as on 24th November. If so, the GST paid on such amount of 14,000 units, ITC allowed. Here number of units 14,000 units. What did they purchase per unit? Uniformly purchase. They purchase the goods uniform rate 100 rupees per unit. That means what value will come? 14 lakhs, 14 lakhs. On which GST what rate? Mr. A purchased the uniform rate by paying the GST 18%. Therefore, on 14 lakhs, quickly tell me by using a calculator how much is the GST is available on that. GST
252,000.
252,000. That means to say that this much is my GST is suffered on those goods lying as a stock as on the date of 24th of November. Immediately pressing the date of obtaining certificate of registration. Certificate of registration obtained 25th November. 25th November. 25th November, immediate pressing date. As in the date, we got 14,000 units. Therefore, per unit 100 rupees, 14 lakhs. 14 lakhs we multiply 18%. GST 2 lakh 52. That 2 lakh 52 ITC is allowed. ITC allowed. Since more than 2 lakhs, certificate from a practicing chartered accountant or certificate from a practicing cost account required because the value of input tax credit is more than 2 lakhs. What about capital goods, plant and machinery? They purchase, they said plant and machinery they purchase what value? 2 lakh rupees. Plant and machinery purchase for 2 lakh rupees. Input tax credit allowed? Not allowed. Only on input goods allowed. Capital goods credit, input services credit not allowed. See the answer for the given case. Yes, the value is 14 lakhs because you got 14,000 units as a closing balance. The GST there on 2 lakh 52. ITC input tax credit eligible for only 2 lakh 52. ITC on capital goods is not allowed. Even input service also be there, not allowed. Puridamma. Good. Referring furthermore. Referring here from furthermore, my dear friends. Coming back. Section 18, subsection 1, class C. A unique provision again it is. Person who ceases to pay composition tax. You are aware of that. Who is a composition taxpayer? First class of mine, I have taken composition levy. Those who are not attend that class, for the benefit of you people, I have been uploaded in my YouTube channel, Rafi, I am Rafi, sir, Rafi sir, IDT Guru, Rafi sir, IDT Guru. If you type in your YouTube, I will come and stand hi. So there you can select the topic called composition scheme and listen. Now, as a composition taxpayer, I am not eligible to avail input tax credit. As a composition taxpayer, I am not eligible to avail input tax credit. But I ceases to become a composition taxpayer. What do you mean this? Ceases to become a composition taxpayer means from now onwards, I am not a composition taxpayer. I am not eligible for composition taxpayer. Why not eligible? Because my turnover exceeded threshold limit prescribed for composition scheme, or otherwise I may be supplied non-taxable supply, or I may be supplied goods or services to outside the state, interstate supply, or I may be supplied goods or services through e-commerce operator outside the state, or I may be cross the limit of threshold limit more than 1 crore 50 lakhs. In some cases, more than 75 lakhs. For services, more than 50 lakhs. So, some reasons, one way or the other, I have crossed, I have not eligible from today onwards composition scheme. Then, with immediate effect, I should switch over to normal scheme. If I switch over to normal scheme, am I eligible to avail the input tax credit? Yes. Inform to department withdrawal of the composition scheme within 7 days from the date I ceases to become a composition scheme taxpayer. Informed, sir. Can avail ITC? Yes, can avail ITC. By declaring a declaration form GST ITC 01 within 30 days from the date of ceases to become a composition tax payable person. For a taxpayer who now switch over from composition scheme to normal scheme, he is eligible to avail input tax credit not only on input goods but also on capital goods. Is one of the uniqueness under section 18 subsection 1 clause C when you compare with section 18 1A or 18 1B. Sir, in the given case, what about input services credit? Input tax credit you cannot able to avail because it cannot be quantified in terms of units. As a closing stock, you cannot identify input service. Therefore, input tax credit or input services forget. But a person who already registered person paying the tax so for composition scheme, now he wanted to go for normal scheme, switch over to normal scheme, eligible to claim input tax credit not only on input goods but also on capital goods. All of you are aware of that. As a composition taxpayer who paying the GST, CGST 0.5%, SGST 0.5%, is eligible to avail input tax credit? Tell me please. Composition taxpayer is eligible to avail the input tax credit? I am questioning. Your answer: Lakshmi Priya, Srikante, Gokule, Bhuvana.
No, sir.
Yes.
No, sir.
Yes. Surya. Ranipet, Vellore chapter, my friend maybe Sivakumar, sorry. Due respect to Sivakumar sir. And you rightly said to me, as a composition taxpayer, I am not eligible to go for claiming input tax credit. Oh, very good. Today what happened? I came to know my turnover exceeded 1 crore 50 lakhs. Am I eligible for composition scheme from today? No. In that case, I have to pay GST under normal scheme? Yes. When I am going to pay normal rate of GST, am I eligible to avail the input tax credit? Yes. If so, there is a system which says, hey mister, you switch over to normal scheme from composition scheme? Yes sir. If so, I ceases to become a composition taxpayer from today, sir. If so, inform to department within 7 days by submission of form GST CMP 02, which is not a 02, it is a 04, sorry to say. Withdrawal of composition scheme form GST CMP 04, 04, not 02. 02 is the application intimation to department to choose the composition scheme. This and all I referred under the earlier session under the composition scheme, which is well clearly uploaded in the YouTube channel of Rafi Sir IT Guru. You just go through. So repeating again, a composition taxpayer now switch over to normal scheme, withdrawal of the composition scheme. He should inform to department form GST CMP 04 withdrawal of the composition scheme within 7 days from the date ceases to become a taxable composition taxable person. And also inform to department form GST ITC 01 form GST ITC 01 inform to department I am availing ITC on the goods lying in the organization immediately preceding the date of ceases to become a composition taxpayer. If so, not only input tax credit and input goods but also input tax credit on capital goods is allowed. In a simplified manner to say that, I will make it here in a simplified manner by diagrammatic presentation that will be more crystal clear for my beloved friends. So here I am giving one example, my dear. My name is Mrs. Chari and Company, registered person, opted composition scheme, opted composition scheme. So far I am paying the GST under the composition scheme. So far I am paying the GST under the composition scheme. After composition scheme, what happened in the financial year 24-25, today what, 14th September 2024, I came to know that my turnover exceeded threshold limit for registration. Threshold limit for composition scheme more than agreed number is exceeded. So as on this date, ceases to be a composition scheme. Ceases to be a composition. Ceases to be a composition taxpayer. That means not a composition taxpayer from this date. If so, prior to this date, prior to 14th September 2024, that means as on 13th September 2024, my inputs plus CG capital goods on which GST allowed as ITC. If so, the supplier who wishes to become a composition taxpayer should inform withdrawal of composition scheme. Withdrawal of composition scheme. What is the form A? Form GST CMP 04 within 7 days from 14th September. Within 7 days you should submit form GST CMP 04, which is withdrawal of the composition scheme. Not only that, for availing ITC declaration, form ITC 01 for availing the ITC within 30 days from 14 September in the given example should submit ITC 01. This much only I said so far. Any doubt to the given case?
Yes, sir.
Clear. Now, my dear friends, here input goods means no problem. When we talk about capital goods, for example, capital goods is 2 lakhs. This is used so far under composition scheme. From now you are going to use for your normal scheme. If so, it should be apportioned between two. One is composition period and normal scheme tax period. For example, composition period, he used this asset, let us say 4 months. That means quarter wise, 1 month, 1 day also 1 quarter. So 4 months means round figure 2 quarters. Per quarter 5% reduce. That means composition period 2 lakhs into 5% per quarter into 2 quarters. In that case, they are giving us 2 lakhs multiplied by 5% per quarter into 2 quarters. How much? Rupees 20,000. The normal scheme attributable 1,80,000. This alone ITC allowed. ITC allowed. The period pertaining to composition scheme, so far 4 months use, which is 2 quarters. Per quarter 5% reduction, which is 20,000. From here, this is a GST on capital goods. It is a tax amount. GST on capital goods 2 lakhs. 4 months used in the composition scheme period. Proportionate 5% per quarter. Number of quarters here, even 1 day also 1 quarter. Here 3 months, there are 4 months. So quarter 3 months, 1 quarter, and 1 month is also 1 quarter. Therefore 2 quarters. I take in 2 quarters. Then straight line method of computation. 5% of per quarter na 2 quarters na 10%. 10% 2 lakhs 20,000. So 2 lakh rupees is the GST on capital goods. I bifurcate in 2 parts. One is rupees 20,000 belongs to composition scheme. This amount ITC not allowed. Got the clarity, my dear friends? This will be crystal clear to you when I am going to bring the numeric example. So how to understand numeric example? I am bringing here. Look here, one problem, excellent problem. Question number 197. Mr. C, a registered taxable person, was paying tax at composition scheme up to 30th July. However, from 31st July, Mr. C becomes liable to pay tax under the regular scheme. Other information input as on 30th July for 3,54,000 inclusive of GST 18%. Capital goods purchased for rupees 5 lakhs, invoice dated 22nd April, GST 18%. Find the eligible amount of ITC to Mr. C. Note, Mr. C not availed depreciation on the GST portion paid on capital goods. An excellent problem it is. Here, Mr. C, he ceased to become a tax composition scheme. So far, he paid composition scheme under composition scheme up to 30th of July. From 31st of July, he ceased to become a composition taxpayer. That means normal scheme. That means immediately preceding the date of 31st July, namely 30th July, what is the stock available? Inputs 30th of July, 3,54,000 inclusive of GST. That means how much GST here? 18 divided by 118. How much comes summa? Quickly tell me please. 3,54,000 into 18% divided by 118%. Fast, quickly.
54,000.
54,000. 54,000 is the GST on goods lying in the organization. So this one is ITC straight away allowed. Apart from that, since he is a registered person in composition scheme, switching over to normal scheme, capital goods credit also allowed. How much here? 5 lakhs. Invoice dated 22nd April. Very good. 18% GST. So here not inclusive basis. Therefore, 18 by 100. What is the GST and capital goods comes into picture? Rupees. GST and capital goods.
90,000.
90,000. 90,000. Now, this 90 fully ITC is not allowed because earlier he was under composition scheme. 22nd April on to 30th of July, how many quarters? Means April, May, June, 1 quarter. July, 30 days, second quarter. Even 1 day also 1 quarter. Therefore, there are 2 quarters. So, 90,000 multiplied by 5% per quarter into 2 quarters, which is equal to 9,000. This much of ITC not allowed. Why not allowed, my dear friends? Because it is belongs to composition scheme. Therefore, balance 81,000 ITC allowed. Here ITC 54,000 on input goods plus 81,000 on capital goods. Totally 1 lakh. How much comes in? 1 lakh 35,000. Yes or no? That much,
Yes, sir.
that much of ITC allowed, amma. 18(1)(c). Any difficulty, my dear friends? Tell me, any difficulty?
No, sir.
Any doubt, ask me. Shall I proceed further, my dear friends?
Yes, sir.
Yes. Now please come back. We are here. 18(1)(c) we covered. Referring now 18(1)(d). 18(1)(d). Exempted supply becomes taxable. The provision of claiming input tax credit. What I said for 18(1)(c), mutandi is applicable to 18(1)(d). That means as such is applicable. This provision, what I explained here, will copy and paste here. That means to say that input goods credit allowed, capital goods also credit allowed, capital goods credit pertaining to the exempted period proportionately not allowed. How to identify proportionately? Rule number 40, subroutine 1, class A says that 5% per quarter, part of the quarter is a full quarter, from the date of invoice till the date exempted supply became taxable for that number of months, number of days, even 1 day also 1 quarter, 1 month also 1 quarter. In that April to March, there are 4 quarters. So, how many quarters? That quarters proportional reduction will take place on capital goods credit, the balance credit on capital goods ITC allowed. Whatever I referred here, 18(1)(c) will be applied 18(1)(d) also. But very clear to make understand this provision with the help of numeric example, I am going to workbook. That makes sense. An excellent problem it is, lifted from the RTP. Referring here, Gautam Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells product alpha, which is exempt from GST. White notification issued under the relevant GST legislations. The company sells product alpha only within the Tamil Nadu and it not registered under the GST. Further, all the inward supplies of the company are taxable under forward charge. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow 15% in the current year. Owing to the growing demand for the product, the company decided to increase its production capacity and purchased additional machinery for manufacturing alpha on 1st July. The purchase price of the such capital goods was 30 lakhs, exclusive of the GST 18%. However, effective from 1st November, exemption available on alpha was withdrawn by the central government and the GST 12% was imposed thereon. The turnover of the company for the half year ended on 30th September was 60 lakh. The board of directors of Gautam Private Limited wants to know whether they have to register under GST after withdrawal of exemption notification. Point number B. In case of the above question, Gautam Private Limited is already registered with respect to certain taxable supplies being made by it along with the manufacture of exempted product alpha. Other facts remaining the same, can it take input tax credit on additional machinery purchased exclusively for manufacturing of alpha? If yes, then when and how much credit can be availed? Advice: Gautam Private Limited on the above issues with reference to the provision of the GST law. Dear friends, you tell me, my dear, in the given case, Gautam Private Limited of Coimbatore is providing exempt supply, wholly exempted, 55 lakhs, not required for registration. Why not required for registration? Section 22, subsection 1, clause section 23. Section 23, subsection 1, clause A says that if you supply wholly exempt supply, not required to apply for registration, as a result not liable to pay GST. So far not liable for registration, therefore not liable to pay GST. Now the exempted supply became taxable from 1st November, they said in the problem. Exempt supply became taxable with a 12% of GST from 1st November. If so, are they required to go for registration? Yes, because previous was more than 20 lakhs, more than 40 lakhs. Therefore, in the current year, from 1st November, within 30 days, they have to make an application for registration. They have to make the application for registration from GST REG 01. So, first point clear. Now, second point, in case in the above question, Gautam Private Limited is already a registered person with respect to certain taxable supplies being made by it along with the manufacturing of exempt product. Other facts remain same. If so, input tax credit on capital goods can avail. Yes, it covered under section 18, subsection 1, clause D. Exempt supply became taxable for registered person. ITC is allowed on not only input goods but also on capital goods. So, if so, here they are asking, if yes, when can avail ITC? How much credit can avail? See, when can avail ITC? How much can avail ITC? First, what is the amount of capital goods they purchase here? They purchase capital goods for paying rupees 60 lakhs. The turnover of the company, sorry to say, not 60 lakhs, my dear, somewhere is mentioned.
30.
Here 30 lakhs, yes. So first the purchase price of capital goods 30 lakhs, you rightly said, 30 lakhs, exclusive of GST 18%. When they purchase here they purchase, when they purchase, they said here, the company decided to increase production capacity and purchase additional machinery alpha on 1st July. So on 1st July they purchase the capital goods. From the 1st July till the exempted supply became taxable. When exemption became taxable? From 1st November. Exemption now withdrawn. That means July, August, September 1 quarter. October, November, December is 2nd quarter. In that, now 1st November onwards, the supply became taxable. In that case, part of the quarter is a full quarter. Therefore, we are taking 2 quarters. So, 30 lakhs. The value here how much given? 30 lakhs. Capital goods value here 30 lakhs. Is not coming here, I will write here. Capital goods worth here is 30 lakhs. On which GST they given, GST rate here is on 30 lakhs, GST is, they paid how much here means 18% GST. They paid 18% GST. On 30 lakhs, 18% how much comes, my dear? How much?
5,40,000.
5,40,000. On 30 lakhs, 18%, 5,40,000. So, if that is available, I will say that here 5,40,000 GST on capital goods. 5,40,000, two parts. One belongs to exempted supply. Other one now become taxable. From 1st of July to 1st of November, 2 quarters. 2 quarters at the rate of 5% per quarter on rupees 5,40,000. How much comes here? 5,40,000, 5%, 2 quarters. 10% means how much? 54,000. Am I right? 54,000, correct?
Yes, sir.
Then balance amount 5,40,000 minus 54,000. Balance amount. How much comes here? How much?
4,86,000, sir.
4 lakh ITC on capital goods allowed so much. This much of ITC allowed to our client here, Gautam Private Limited. ITC can avail. How much credit we got? When can avail ITC? Only when they obtain the registration. Already obtain registration. From which date they became a ceases to become a compulsory taxpayer? I mean, from which date they are became taxable supplies? Exemption withdrawn from which date? From 1st of November. So exemption is withdrawn. Then from the 1st of November onwards, they are eligible to avail input tax credit. Mentioned here for the kind consideration. Capital, so much of information given. Then finally I said, in the given case, credit is allowed. How much credit allowed? 4,86,000. That's what we got. From which date they can able to eligible to? From 1st of November. Therefore, the credit available from 1st of November because exempted supply became taxable from 1st November. From 1st November, they are eligible to avail input tax credit on capital goods. Got the clarity, my dear friends?
Yes.
So we have been covered extensively section 18.1, subsection 1, class A, class B, class C and class D along with the section 18, subsection 2. In all these classes, my dear, in all these classes, mean to say 18.1D, 18.1A, B, C, 18.1A, B, C, D. In all these 4 cases, subclasses, 18.2 applicable. To avail the input tax credit, what is the time limit? Means invoice date to the date of availing ITC should be less than 1 year and the value exceeds 2 lakh rupees of credit. A certificate from a practicing cost accountant and or chartered accountant is required. As simple as this.